one. What's up, Jerry?
All right.
How you doing, my friend?
It worked. I
We
am doing
are
good.
remote as remote can be. Obviously, we're not in the same place today. Jerry's on a little much-needed vacation. Actually, working vacation.
Oh, working vacation. Yeah.
But he's in shorts and flip-flops, so screw him.
Yes, sir, I am.
All right, man.
Greetings from sunny Florida. All
yeah,
right.
greetings from freezing your gonads off, DC. What do you got for us this week, man?
All right. TSP Weekly Update Show, January 16th, 2022. All right. Now I can see it. Awesome. Show this week. So we had a request via Facebook for a tool that's called relative rotation graphs. Sounds very complicated. It is a little bit complicated, but it's a pretty good tool, and we're going to get into it. Next thing we're going to do is a little bit of an analysis. So if you were a member of the site, you would have received the market update on Wednesday. So during that market update, I did an analysis of all 4 TSP funds, and I'm gonna share the IFund analysis that I did that day, and then what happened. So that was on Wednesday, and then so what happened on Thursday, and I'm gonna sort of talk through that as an example of kind of what you get if you become a member of the site. The bonus chart is going to be Zim integrated shipping service. I bought some Zim stock a couple days ago. I'm going to show you where I bought it and where I put in my stop loss and why. And then we'll get into the 2-year weekly charts. Okay, relative rotation graphs. So this is a tool in stockcharts.com. You can find it at the link right here. Actually, you would find the write-up about it. This is the introduction to the write-up, but I'll get to where you can find it in stock charts here in a minute. But relative rotation graphs, commonly referred to as RRGs, they're a unique visualization tool for relative strength analysis. Okay, so relative strength, you want to know, for example, is the IFund outperforming the CFund, right? Relative to each other. So they could both be going up or they could both be going down, but one of them is going to go down more than the other and vice versa. So we want to be in the funds that are outperforming the other funds, right? We want to be in the ones that are performing the best. So the way to do that is to understand the relative strength of each of the funds compared to the others. So chartists can use RRGs to analyze the relative strength trends in several securities against a common benchmark and against each other. So the real power of the tool is its ability to plot relative performance on one graph and show true rotation. So you'll see what that means as we look at it. There are 4 sectors in the graph, and the line of the chart rotates through those 4 sectors. So we've all heard of sector and asset class rotation, but it's hard to visualize this rotation sequence on linear charts. RRGs use 4 quadrants to define the 4 phases of a relative trend. True rotations can be seen as securities move from one quadrant to the other over time. And this is important now because, as we talked about, the IFund is beginning to outperform the C and the S fund because the IFund isn't dominated by tech. So we just talked about it on the members only call webinar that we did an hour ago. The IFund is outperforming because the C and the S funds are dominated by high growth tech stocks. And in a high interest rate environment, value stocks are going to outperform, and the tech stocks are going to underperform. So that's why the IFund is outperforming. Okay. So that's the introduction to it if you go to that link. And then there's several pages of stuff that explains the whole thing. The conclusion, right? Relative rotation graphs make it easy to separate the market leaders from the market laggards. In our case, we want to know which fund is leading. In the same regard, RRGs save time and money because they narrow the focus to the parts of the market that deserve attention for further analysis. So we've talked about the S&P 500 has 11 sectors, and this is obviously outside of TSP, but you could drill down into the 11 sectors and figure out which ones are outperforming the S&P 500 as a whole and only invest in those 11 sectors. RRGs can be tailored to suit any trading or investing style because they measure both momentum and trend for relative performance. So that, for our purposes, that's awesome. They measure both momentum and momentum and trend for relative performance. Momentum traders can focus on crosses into the improving quadrant or weakening quadrant. So as the line crosses from one quadrant to another, it's a signal. It can be a trading signal. Trend followers can focus on crosses into the leading quadrant or lagging quadrant. Keep in mind that these are relative performance indicators, and there is still a risk that the rotation turns back or even reverses. And you'll see that in the chart here in a second. As with all technical tools, these relative performance indicators should be used in conjunction with other technical tools to give the chartist a more complete picture. Definitely, this is just one tool in the toolbox, and it just gives us a different way of looking at it. So if you go to stockcharts.com, on the left-hand column under Investor Tools, if you scroll through Investor Tools, you'll find the tab that says Relative Rotation Graphs. Click on that, and this is the screen that comes up. The default screen is not the symbol $DWCPF. That's the S-Fund for us. I put it in there, but you can put any symbol you want. You can make the benchmark any benchmark you want. In this case, I made it the C-Fund, right? SPX is the S&P 500. You can play around with this a lot. So the way it is right now, this is the graph, the relative rotation graph of the S-Fund. So it starts here. And this is the last 29 trading days. Okay. And this chart is the benchmark. So we're looking at, what is this one? I guess this is a year for the C-Fund because it's the benchmark. But we're only looking at the last 29 trading days, which are right there. Okay. So if you're on the site, you can move these. You can set your cursor on here and pull this 29-day range back and forth within the range, and it'll make this rotate. Okay. It's a very interactive tool. You can't see it, obviously, when we're showing it on a PowerPoint slide. Yes.
Okay.
Yeah, there are other tools that you can do on the paid side, but yeah, this is on the free side.
Cool.
So you can change the tail length, which basically means so this is 29 trading days, right? So here's 1, 2, 3, 4. You can count the dots. Each one of these dots gets you to where it ends right there. So, and it kind of makes sense if we think through it. So a month ago, the S-Fund was lagging, right? We had some movement higher in the S-Fund on a percentage basis versus the C-Fund, so it was improving. And then we had a big fall off, right? It never made it into the leading quadrant. It had a big fall off, and now it's back to lagging. And we'll go through and look at what that looks like on a price chart. But in terms of the relative rotation, the S-Fund went from lagging, started to outperform, and then dropped right off. So if you go to it at stockcharts.com and you hit the animate button, it'll go through the 29 days. It'll start here and it'll circle through, and you can see it circle, right? It's really interactive. It's really, really cool. Okay, so in this case, this is the S-Fund versus the C-Fund. Okay, so again, it started off lagging, started to improved quite a bit versus the C-Fund, and then dropped way off. Okay, so RRG charts show you the relative strength and momentum of a group of stocks. We're going to do the 3 funds at the end. So I'm going to do one fund at a time versus the C fund, and then we'll take a look at all three at the same time. You could put as many, as many funds in here as you want, or stocks, ETFs, whatever you want. You do the first one, comma, the next one, comma, and you can have as many as you want in there. You can also do groups. So if you hit the groups drop down, in the drop down, it'll give you like the XLK is the tech index, and you can hit the XLK, you can hit all the 11 sectors within there, and then all 11 of these will show up relative to the benchmark. So again, very interactive, very cool tool. All right, so that's what the last 29 trading days looks like in terms of this relative rotation for the S fund versus the C fund. Here's what it looks like for the I fund. And this should make sense, and we're going to see it on the regular price chart. But back here 29 days ago, the IFund was lagging. But once the Fed came out and basically made it clear that tech stocks are in big trouble, the IFund had already been improving, started to peter off, and then came right back up into leading. So now the IFund is clearly leading the C fund, and we know it's leading the S fund. And we know that the reason is because the IFund is not dominated by tech, and tech is rolling over. So all the stuff makes sense. It's just a different way of visualizing it. And I kept the other settings the same. So the benchmark is still the C fund. That's the same. It's the same 29 trading days. If you hit animate, you would see it, how it actually does this. So definitely go to the stockcharts.com and check it out. Okay, so if we put all of them together, now you got 29 days ago, this is where the S fund started. So this is all relative to the C fund. This is where the S fund started. This is where the I fund started. And if you hit animate, it shows you, at the same time, these are all moving until they finally get to where they ended. So it's pretty cool. So how could we use it? You can see the I fund, for example, started back here as lagging, starts moving into, so it crossed here. So this could be one indicator of a time where you might not necessarily think about buying it, but now it's on your watch list. Now you're looking that it's improving relative to the C fund. So it's still in that improving zone, and then it crosses over into the leading zone. This might be a time that if all your other indicators lined up, when it crosses into the leading zone would be a time that you would consider buying it, right? Does that make sense? Okay. So that's sort of the high level view of how you would use relative rotation graphs. Does that make sense to you?
It does to me.
Okay, good. That was partly, I wanted to make sure you could still hear me. Okay.
Yeah.
All right. So FFund, I put it up here just because the FFund is one of the funds, but the reason it's in this leading section here is because on a percentage basis, the FFund doesn't go up and down as much as the stock funds do. So even though when we look at the FFund chart, it looks horrible, on a percentage basis, it's not that bad, right? Because the FFund on a percentage basis doesn't move that much. So that's why you get, so you have to know some of the background, because if you looked at just this chart, you'd be like, hey, as soon as it crossed from weakening into leading, we should have, sorry, where was I? I have that backwards. Here's where we ended. So we started as improving, we moved into leading, out of it, and now we're back into improving. Basically, this is the part I was talking about. The F fund looks like it's improving relative to the C fund because on a percentage basis, it's not losing as much as the C fund is over this last 1, 2, 3, 4, 5, 6, 7, 8 days, 8 trading days.
So where does this particular indicator fall within your kind of list of indicators as you're going? I mean, I kind of know the answer to this, but I'm asking that for, for the audience. If you were to kind of tick your way down indicators, where does this fall, and where, how much your weight you're going to give to it, or what you're going to use it for?
Yep. To be honest, I haven't looked at it long enough. I'm gonna start to plug it in and see where it fits, and really if it fits.
Is this something you would take a
question,
look at once a week, or daily, monthly?
Well, it's set right now to daily, right? You can set this setting to either daily or weekly.
Yeah, well, I mean, I know you could change the
I know
time
I know what
frames.
you're saying.
Yeah, yeah.
Yeah. Uh, I don't know yet, to answer your question. I haven't played with it long enough to know where and how and if it's actually going to fit in to the methodology.
I mean, it
I don't know
seems
yet.
very
I need,
useful, right?
yeah,
Yeah.
it is. I mean, the most useful thing is that it has this axis line. So once it moves, from lagging to improving, now it should be on your radar. And if it moves from improving to leading, uh, it's leading. Now, once it's in that quadrant, it's leading the benchmark. So if it's leading the S&P, you want to be in it. Now, it can do a zigzag on you, right? So I don't know yet. I don't know the answer to your question yet. Okay. So again, this analysis we did on Wednesday. Okay. Here's the chart at the close on Wednesday, the 12th of January. The IFund gapped up a pretty good chunk, right? Gapped up almost 1%, 0.98%. And we had support at the 100-day exponential moving average and the 50-day simple moving average. The technical indicators, were turning higher at the time. And the question was, why didn't I see an alert to get back into the IFund, to get back into the stock funds, because we're in the G fund? Why didn't we see an alert? The last thing that I want to do, we have 3 consecutive lower highs, right? And we drew the trend line, and we are just barely below that resistance level, right? Even though we gapped up, we got support here, but we're just barely below that resistance level. And so you could make an argument that you want to get back in once we get support here at the moving average lines, and we had a nice breakout right here, and we had a follow through day right there. All true. And then you have to take into account that we only have 2 moves a month in TSP. So I wanted to give it another day. I want to see the IFund up here outside of this resistance level before I'm willing to get back into it. Okay. So that's pretty much what I said on the market update in terms of the IFund on Wednesday. That's what it looked like on Thursday. Okay. It opened at the top of that rectangle right on that resistance line. And then for the rest of the day proceeded to give us this bearish engulfing candle and finished almost at the low of the day at the bottom of that rectangle. So it did exactly what I was concerned about, right? It hit resistance at that downtrend line and rolled over pretty hard down, 0.73%. So that's an example of the level of analysis that you're getting if you're a member of the site. Okay. Bonus chart, Zim is an Israeli company. They do integrated shipping services. What we're looking at here is if you are a subscriber to Investors Business Daily, right? It's investors.com is the website. If you they have all kinds of different lists, right? And this one showed up on my radar. Okay. So we had a previous high here. We had resistance there, resistance there. We barely broke above it there, came down, gave us a little cup, and broke out right there. Okay. So it showed up on my list at about $59, like right in there. And I bought it at about 60. So why buy it? In terms of IBD, which is why I'm showing the slide, you get this composite rating of 99 is the highest rating you can get. Zim is also ranked first in its group. So we talk about the 11 sectors. It's ranked first in its group, and it has the highest possible composite rating. And it's relative. So composite rating is there's a lot of inputs into it, but you basically look at the composite rating and the relative strength. And this relative strength line at 99 is the highest relative strength, because it's a 0 to 99. Its relative strength is better than 99% of all stocks. That's what that means. It's the same as what the composite rating means. The composite rating is better than 99% of all stocks. So it's the maximum. So it doesn't mean the same thing when we say relative strength. Relative strength is an interesting thing because when we can use it in terms of the C fund relative to the IFund or whatever, but when you do it relative to the entire universe of stocks, it's sort of like an SAT kind of thing. Like if you get the 99th percentile, that's what this is. It's the 99th percentile relative strength. Okay, so basically those are the fundamental factors that go into IBD, and then you apply the technical factors. So it's got a great composite rating, it's got a great relative strength, and then it's got a breakout, and that's where you buy it. And it's on big volume. Okay. So here's what it looks like on stockcharts.com. So we had the high, tested it, came down a little bit, broke out, and that's where I bought it right there. It's only been going for a couple of days, but so far so good. So I drew this trend line, right? And so I'm looking at it before I bought it, because I'm deciding if I buy it, where will I get out of it, right? So clearly anything below here, anything below that low is a big problem. But I bought it up here at 60. I bought it about 60. So to let it drop from 60 to 52 and a half, way too much of a percentage loss for me. I'm not willing to do that. So I looked at it and I'm like, okay, here's the high, here's a high, here's a high. We got some level of support there, even within this one day, right? It opened, came below it, but then finished higher for the day. So bottom line is, I put my stop in here at 57.40, like right there, when I bought it. So if the market had rolled over, so I bought it here, if it had rolled over and hit 57.40, it would have stopped me out and I would have taken a little bit of a loss.
And that's important to know,
like,
from an educational perspective, right? Which is why we do this. It's why we talk about stocks outside of the TSP, because we want to get a different perspective. But in the TSP, regardless of what investment, security or asset you're talking about, you want to know, you want to have your line in the sands drawn before you get in. You don't want to jump in and then start figuring it out, right? Because things could change on you really quick. And so, as Jerry pointed out, before he even bought, he'd kind of already figured out, in investment terminology, put his stop in. That means it's going to sell for him at that, too bad we can't do that in the TSP, right?
Right.
But anyway, having your line in the sands early is very important, because you're just going to feel less emotional about it. You've already made the decision. You know what you're going to do, and just carry it out, right?
Yeah, 100%. I mean, so when I first bought it, I had that stop. I drew that trend line, and I'm watching it now as the price continues higher. The further it extends beyond the trend line, beyond this trend line that I drew, I'll I'll adjust my stop. So I'll always keep it below that trend line. But now maybe, I bring my stop. If price gets up here to 70, I bring my stop down here to, 62.50 or uh, you know what I mean? I'm just it basically prevents catastrophic loss. And once my stop is above my buy price, then I can't lose any money. So it's yes, I wish we had it in TSP, but we don't. So you have to do it mentally. You have to have your stops in,
Yeah, in your
mentally, or write them down,
right.
or whatever.
You say, hey, this is where I'm just not comfortable staying in after that, and you have to kind of follow through with it. Otherwise, you're making emotional decisions.
Right. Right. I mean, I bought this before I came down to Florida, and I've looked at it again, but I know I don't have to do anything with it, because if it hits my stop, I'm out. The next thing I'll do as price continues higher is just adjust my stop. And again, once it's above my stop price is above $61, I have zero risk and only upside to be made. But again, can't do it in TSP.
But it's a good learning tool.
It's a good learning tool, and who knows, maybe that's one of the things we'll be able to do in the mutual fund window. Okay. So the TSP fund charts. C-Fund 2-year weekly. It was last week was rough. This week it was volatile, right? You can see last week was a pretty solid down week. This week we came down, got support at that 20-week exponential moving average line, but this week's high didn't get higher than last week's high. Okay. So we got support at that moving average line, but we didn't put in a new high this week, right? We're below where we were last week. So, and all these several weeks, most of out of the last 1, 2, 3, 4, 5, 6 out of the last 7 weeks, 4 of them are on big declining volume, and we got relative strength decreasing. MACD had already been decreasing. Stochastic is heading down. So on a weekly basis, even though the price is continuing higher and it's still above that moving average line, all the indicators are lining up in a negative way. So that's how we look on the C-Fund. S-Fund, it broke down hard below that 20-week exponential moving average 1, 2, 3, 4, 5, 6, 7 weeks ago. And you can see every time it's tried to get right the week after it broke down, it went all the way back up to it, hit it, and came back down again. Every time it's tried to hit that exponential moving average line, it's rolled back over. So, and the technical indicators obviously not looking good at all, clearly trending down. And then this week, so we had talked a lot about this 2100 level, and you can see that the price basically hovers around that 2100 level until this week. So now we have a weekly close below that support line. Definitely a bearish thing for the market here. We had a question on the member only call, and the question was, hey, it looks like things are moving lower, but they're not spiking lower. They're just kind of trickling lower. And kind of, what did I think about that? And that actually concerns me, because when you get like big volume down moves, and then in this case you got this reversal pattern, things start moving higher. Basically, the market hasn't thrown in the towel yet. There's still people that think that the market's going to move higher. When investors finally say, "All right, I'm done. Well, I'm going to throw in the towel," you get like a big move down, and you close at the bottom of the day's range, and then you get to come back up. We're not there yet, in my opinion. So hopefully that answers Sherry's question if she's listening. Okay, IFund. So we talk about, and you can see, we talk about how the IFund is outperforming the C and S funds now because IFund isn't dominated by tech. So you can see here, the IFund has been increasing, right, since this low down here. It's been increasing for 1, 2, 3, the last 4 weeks. If you compare that to the S fund, right, it's been decreasing. Compared to the C fund, price isn't going down, but you got a whole bunch of negative weeks in there. Okay. So when you compare that now to the IFund is outperforming and it's got positive volume and the technical indicators are moving higher. That's all the positive things, right? On the downside, you still have this curved topping formation in place. So until we can get, let's say we connected a trend line like that, until we can get up here somewhere, we're not out of the channel, right? We got a really good support line at 75. But until we can get up here and ideally above this high, once we get above that high, it's a confirmed new uptrend. So we're still in the pattern and on a weekly basis on the IFund, but the IFund is outperforming. It doesn't mean that the IFund is going to go higher because if the C and S funds go down and the IFund will go up, it doesn't mean that. It could be if the C and the S funds go down, the IFund just doesn't go down as bad as the C and S funds. So outperformance it's a relative term. Okay. FFund, we've been talking about this for a while. It completely collapsed last week when the Fed came out and said they were going to do 3 or 4 rate hikes this year and stop quantitative easing policy. You got big volume down weeks. The technical indicators, you could say they're bottoming out, and maybe that's a positive thing. But there's no support level here. There's no reason in terms of support to get back in. You could say, well, it's going to hit this prior low and then jump higher from there. It's possible. If the technical indicators, if we get an oversold condition like that on the relative strength, let's say we get oversold right here, and then it turns back up, and the MACD crosses back, right? The black line crosses back to the red line, and the slow stochastic turns back up. Then at this support level, then yeah, you have a good argument to get back into the FFund. But we're not there yet. Okay. It seems like it was a really quick show.
Well, sometimes it is when I shut up. There'll be some of our fans that are happy that I didn't talk today. I get a little.
I've heard that comment before. That could be true.
No. Well, that's because I'm just a little bit more of a smart aleck than you. You're good cop, I'm bad cop. It's just the role we play.
Yep.
If you guys have questions, please put them in the comments section wherever you find this, whether it's on YouTube, Facebook. We'll do our best to answer them. We always do. And if you want to hit us up, otherwise you can send us an email at info@growmytsp.com. It will default to tell you to go to support, but we still see it eventually, and we'll try to get back with you as quick as we can. Hopefully you guys like this format. I mean, it works for us when we're traveling. We can't be in the same place, so we like to play with it and see what we can do to keep it fresh.
Yep, we're going to be here for a couple of weeks.
Yeah, well, Jerry is.
Yep, same kind of thing next week.
Yeah, absolutely.
Definitely log or hit the link for stockcharts.com and check out the RRG tool. It's I can't do it justice on basically a 2-dimensional PowerPoint. So when you get in there, you'll be able to play with it
because you can't make it
cool
animate, right?
Right.
Yeah. All right, guys, if you like it, share it with your
All right.
friends. Check us out every week, Sunday at 6:30 p.m. With that, we are out of here.
Out of here.